In today's video, we're talking about something most people overlook when moving overseas for tax purposes: how to actually stop being taxed by your home country after you leave. If you don't know me, I'm Elliot, founder of the UK and UAE-based tax and accounting firm Make Accounting Simple. And on this channel, Let's Talk About Tax, we break down complex tax topics for entrepreneurs and online business owners. Please note that nothing in this video should be taken as personal, tax, legal, or financial advice. This video is for educational purposes only. When you relocate for tax reasons, the key question isn't just where are you moving to? It's when does your old country stop taxing you? Every country has its own rules for when your tax residency officially ends. And the timing matters because if you leave halfway through a tax year, you might still owe tax on income or gains earned after you've left. Take this example. Let's say your country's tax year runs from January to December, and you move overseas in August. In some countries, you're still considered a tax resident until the end of that year, meaning you'll pay tax to your home country for the full 12 months, even though you left partway through the year. In other countries, you can qualify for something called part-year tax residency or split-year treatment, where the tax year is divided into two parts. The period up to when you leave, you're taxed as normal. The period after you leave, you're no longer a tax resident, so you're not taxed on your worldwide income. To qualify, you usually need to meet certain conditions. That could include starting full-time work overseas or establishing a home abroad, like buying or renting somewhere long-term. Let's look at a few examples. The UK allows split-year treatment if you meet one of several split-year tests. For example, full-time work overseas or setting up a permanent home abroad. However, it doesn't grant split-year treatment if you are non-resident solely based on the ties test. Ireland has a part-year residency, allowing you to cease tax residency partway through the tax year. However, Ireland will continue to tax you on capital gains for 3 years after you leave. Norway has a part-year residency. However, unless you no longer have a home in Norway and spend less than 61 days there per year when you leave, you will continue to be taxed in Norway on your worldwide income and gains for 3 years until after you leave. So you can see why it's crucial to know whether your home country cuts off your tax residency immediately or after a delay. If you don't, you might move abroad, set up a new company, start earning tax-free, and then discover later that your home country still wants a share because you didn't officially cease tax residency when you thought you did. And while most countries have some form of part-year residency, it's usually not automatically given, and it sometimes requires you to give up more than the minimum to no longer be a tax resident. If you're in this situation, please talk to a professional. There may be legitimate ways to structure things like deferring gains, changing the timing of income, or qualifying for part-year treatment to reduce or eliminate that overlap period. The bottom line is that you need to understand your country's specific rules for ceasing tax residency and plan your move carefully so you don't get hit with unexpected tax bills after you have already left. If you found this helpful, please subscribe to the channel and drop a comment if there's a specific topic you want me to break down next. If you're looking to set up your business in Dubai, relocate elsewhere for tax purposes, or would like some accounting or tax support in either the UK or the UAE, you can find individual links to work with me in the description. Also, as a reminder, this video and channel breaks down tax topics to make them easier to understand, but it is not personal tax advice, and these videos are for educational purposes only. Everyone's situation is different, so please speak with a qualified professional specifically about your situation before making decisions about your taxes. Thanks for watching, and I'll see you in the next video where we'll be talking more about tax.